So, in my experience, medical aid needs to be the starting point of your financial portfolio because in the market space, in the marketplace of South Africa, you've got private hospitals and you've got government hospitals. And the reality is, people don't want to go to government hospitals. So, if that is the case, medical aid is imperative. You need a medical aid before you look at your investments, before you look at your life insurance, because if you land up in a car accident, where do you want to go? It doesn't matter if you lose the leg and you get a payout from disability. If you're in hospital for a month in ICU, you're not going to have any funds left over anyway. So medical aid, in my opinion, needs to be the first thing that you talk about when structuring a financial plan for a client. We, in the independent arm, provide advice a little bit differently when it comes to medical aids. We try and form our clients as best as possible how the structure of the medical aid actually works. We've got a number of clients that have that traditional mindset of a medical aid needs to pay for everything in and out of hospital, but the reality is that it's not how it works anymore. And unfortunately, our clients are not informed that things have changed. So we are big advocates of hospital plans when it comes to medical aid. So the insurance component of the medical aid is the hospital plan. And if anything happens to you with a bit of gap cover, you've got peace of mind that you're not going to have to pay out of your pocket. And if you need to self-fund a GP or medication, it's our point of view that it's cheaper to do 1,000 or 2,000 Rand every now and again, as opposed to spending the 2.5 grand extra every single month for the savings that the medical aid gives you in January. So we don't actually sell medical aid without gap cover anymore, because the reality of our medical industry is that our doctors are not regulated in terms of what it is that they can charge. So you can have a professional surgeon that is charging 5-6 times the medical aid rate, whereas the medical aids, whether it be Discovery, Bonitas, whoever it is, they only have agreements up to a certain percentage. So then that cost then falls onto the client, and if invariably falls onto us as the advisors a complaint because we either didn't explain it properly, or the client forgot, or the client just doesn't understand how a doctor can charge what they charge. So what gap cover does, it fills the gap between what these doctors are charging and what the medical aids can afford to pay. It's a nominal amount of money in the bigger scheme of things. It's generally less than 10% of the actual medical aid premium. And in our opinion, it should be on all medical aids across the board. So gap cover is, well, there's certain add-ons, but we'll just talk about what the core of gap cover is. So what gap cover does, it covers the gap in hospital. So if you admitted into hospital for whatever reason, whether it be a planned procedure or an emergency, and there's a shortfall in payments, gap cover then covers that shortfall. However, if you need to go see the GP and you're on a hospital plan, or you've run out of savings, gap cover doesn't cover you outside of hospital. And the reason why is because gap cover is an insurance, whereas medical savings is a loan. So the medical aids give you that savings in January, and then you as the client then pay that loan in 12 equal increments over the year. So gap cover can't cover you for a loan that you've spent, but it can cover you for an insurance shortfall in hospital. The 1.618 gap cover product does have added benefits, whereas if it's the 12 o'clock at night, child's got a fever, and you need to go to the emergency room, they do have certain limits that you can then claim that back. I think it's about 2 grand per member. I'm not entirely sure on the T's and C's, but you do have that added benefit, but only for ER, emergency room visits, in certain times of the day. The process is very similar to your medical aid claim process. So you'll communicate with your advisor or directly with the gap cover company. They'll then supply you with a claim form. They're very simple to fill out. You fill out that form, send it back to them, and then 90% of the time, the gap cover company handles everything in the back end. There's very seldom that you as the client need to then step in as well as the gap cover to cover those shortfalls.